We've got an earnings alert on Sonos. Shares are surging in the after-hour session. Let's get to Christina Partsinevelos for the breakdown of the company's quarter. Christina.
Yeah, the high-end home audio brand definitely posted a double beat on its latest earnings report in a record quarter, and the market likes it. Like you said, shares are up 8%. The company posted a surprise beat with earnings per share at 12 cents on revenue of $379 million, so that's 52% higher compared to last year. On the earnings call, which is going on right now, the company highlighted concerns for supply constraints, creating backlogs that could offset some revenue growth in the fourth quarter. They said they will look at product prices in the future. This question was asked more than 3 times on the call. But Sonos attributes strong consumer demand in this past quarter to 3 factors. We're listening to more audio podcasts, we're listening to audio books and other audio content. Secondly, with more Hollywood movies going straight to our TVs, consumers are looking for theater-like audio experiences. And lastly, with so many of us still working from home, constantly on those darn Zoom calls, consumers are looking to improve the audio quality of their home offices. On the earnings call as well, Sonos did bring up its lawsuit with Google. The 2 companies teamed up in 2013 to work on a music program when Sonos shared the blueprints to its speakers. Now Sonos is suing Google for 5 patents and said Google is a, quote, serial infringer on Sonos patents. But they'll have more to say when the judge issues his decision on Friday. There you have it. Back to you, Melissa.
Christina, thank you. Christina Partsinevelos. Steve, you've been long on this name, so what do you make of the quarter? You must like it.
I do like it. And Patrick Spence, the CEO, lined out those 3 tailwinds that Christina just mentioned. And I think those are all still relevant. And then where Christina just left off was this patent case that we're going to hear the ruling on Friday or thereabouts. And the consensus is that it's going to be in Sonos's favor. So I would look for the stock to leg up even higher than it is now, obviously. Recent highs have been in the low 40s. But when people look at this stock, we're looking for $60 to $80, I think, is reasonable, given the all the tailwinds that the CEO has outlined. Now, when you look at the Amazon speaker, the Google speaker, this is a different product. This is a premium product that people go for when they're trying to elevate their homes. So this is not just the speaker that you're throwing around. This is something that's in your house, and this is best in breed, best in class. So I think the stock can move substantially higher, even after this move that we're seeing on the back of earnings.
If people are getting out of their house more and doing other things and maybe actually going to a theater or to a beach where they are not home and not using a Sonos speaker as much, does that matter, Guy, in your view? Or is this part of the home improvement trade, and because housing is hot, you still like this?
Yeah, absolutely. And Steve's been on this for a while. Here's what concerns me quickly about the quarter. The quarter is outstanding. The one number that sticks out to me is inventories are up 69% year over year. That's a significant increase in inventories. Now, the bulls will say that's great because they're going to meet the demand that's out there. But if they don't, margin's going to get crushed. I'm sort of with Steve on this one, but it's got to close above 44, the recent all-time high in April, to really break out to the upside.